um, the USD yen currency pair 15 minutes chart. Okay, and I want to show you something very important here. uh, First, I want to mention to you that the ability to trade is different from the ability to make money. Okay, a lot of traders can perfectly trade, but they can't make money. Okay, and they know that. Okay, if you ask traders, they know, they understand the market perfectly, they know exactly how the market functions. Okay, but they just fail to make money. Okay, so the ability to trade is different from the ability to make money. Okay, now I believe most of the traders will agree with me, and in most cases they will get their decision right, but they will fail to get anything out of the money. Should we call it the curse of the market or not? I don't know. Okay, so right here we have the USD yen. As you can see, the ABCD pattern is right here. This is the A. If you follow my cursor here, this is the A. Hold on, please. Hold on, please. Okay, this is the A point here, and this is the B point here, and this is the C point here, and this is the D point here. Okay, in theory, okay, I repeat, in theory, the distance from A to B should be equal to the distance from C to D. Okay, and you sell at D. Okay, you sell without asking any more questions. You just sell at D. Okay, very important, because this is a pattern, so we respect the pattern because the pattern has a high probability. They tend to repeat themselves, and most traders try to take advantage of them. So you do exactly with them, and with the law of the majority, we are likely to win. And if you sell here, you are in a pole position. That's where you want to be. You want to be on top of the pyramid, okay, with a very tiny stop loss. Okay, if you sold it here, you will be rewarded already here. Okay, you may take your profit and walk away, or maybe dare to stay more in. Maybe you'll be taken out, but who cares, because maybe your stop is very limited, 26 pip. Okay, if you are happy to take that risk and stay longer, that's okay. But if you get in right here, you'll be rewarded here. I'll show you quickly which level is that. You'll be entering at this level here, 92.82. The price went to 92.63. Let's call it 20 pp. 20 pip. Okay, that's a 20 pip so far. If you get in exactly here, because after this black candle here, you enter right here at 92.82, and if you take your profit quickly at 20 pips at 92.62, whatever it is. Okay, and if you remain in this trade waiting for longer, bigger profit or bigger reward, okay, your stop loss should be maybe 26 pip. Okay, 26 pip is no big deal. Okay, and you just stay in and watch what's going to happen. Okay, and wait for the market to take you out, or yourself, you close your position at a break even. Okay, so the ABCD pattern, very important, not the ABC, but the ABCD pattern is a market pattern. Okay, it's a very important market pattern, because the market will trend from A to B. That's a trend, A to B, and then the market will pause during the session from B to C. Okay, and then the market will trend again from C to D. Okay, that's what's happened consistently. Okay, I repeat, very important, pay attention. The market will trend first, okay, from A, this session A here, from A to B, and then the market will pause from B to C, and then the market will trend again from C to D. Okay, that's the theory. Everything is a theory. Don't take it like a science. Be very, very flexible. Don't just play it. Okay, anyhow. Okay, very important. So the market pattern, if you watch my previous video regarding the market pattern, you understand what I'm talking about. Trend, pause, trend. Okay, trend, pause, continuation of the same trend, trend, pause. Okay, divergence uh, of the previous trend. Okay, or trend, pause, trend, continuation of the same trend. Okay, or the market will continue pausing for long time, for some time, maybe even 3 months sometime. Okay, if you're on a daily chart, you may see that sometime. Okay, so this is what's happening consistently, and you need to take advantage of that. Okay, that's the language of the market. So we have something that is stable. Okay, because if you are in a chaotic situation, we need something stable. Okay, that we can work with, and this is something stable in the market, and we can take advantage of it and work with it as the professional traders are doing with the people with a lot of money, the fat wallet, the biggest wallet. Okay, the biggest bulls and the biggest bear, they control the market. Okay, so they use pattern because they don't want to take too much risk. Okay, they want to be on top of the pyramid, so to speak. Okay, so we want to take advantage of that knowledge, okay, in order to take a bit of their profit also. Okay, because right now more than 80% of the traders are losing consistently, and not only consistently, abundantly. Okay, right now people are losing serious and hard earned money. Okay, and it's not fair. Okay, we need to get it at least to 50% of people losing and 50% of people winning, and my intention is to help people to get there. Okay, now what's happening here is that the market will trend, and when the market is trending, we should have a high volatility. By the size of the range of the candle, you can see there's a high volatility in this part of the price. Okay, and then low volatility during the pause period, or the consolidation period, or the quiet market period, or the balanced market period, as some people prefer to call it. Okay, this is a balanced market. You may hear this on the internet. If you never heard about balanced market, go and read about it. You will hear all sort of time price opportunity, all kind of high language, typo value high, typo value low. I don't want to confuse you with all this technical knowledge. Okay, so this is the pausing market. Okay, the Bollinger Band will squeeze during this period right here. Okay, now because I have only here the price on this screen, if I have other indicator on this chart like stochastic or MACD, and the price is on top, you will see that this Bollinger Band, even though it looks big here, is quite squeezed. Okay, even though this session looks like big here, if you put other indicator on the chart, you will see that this session is quite squeezed. Okay, now, and then we have this trend here, you sell right here. Okay, this is the market pattern. Okay, market pattern, trend, pause, trend. Okay, trend, pause, change of the trend, or in this particular case we have the trend, the market pauses, and then the continuation of the same trend. We will sell here, we will sell here. Okay, so we sell here exactly right there. Okay, so put that into your arsenal of training. Okay, and use it. Okay, so on a daily chart, this is a powerful tool. You see all the people who are giving you advice about swing trading, signal, and all that. That's what they are using. Okay, so they use this consistent, valid pattern: market trend, market pause, market trend, market pauses, market trend, market pauses. That's what we're doing all the time. Okay, and they will tell you to sell right here, and you will say, wow, this is happening right here now. Okay, so then I'm talking also about the ability to make money. Okay, how do you make money? You have to work on that also, because a lot of traders can trade. Okay, I've seen it myself. Some professionals even are struggling to make money because they don't have the ability to make money. Okay, now, if you want to make money, you have to manage your trade carefully, okay? Which means you take only the high probability trade with a very limited stop loss, okay? So your strategy should be to take almost for various time frame. Okay, it depends which time frame. The higher the time frame, the higher risk you are taking, obviously. Okay, so myself, if I'm trading from a 5 to 50-minute chart, I prefer to take like to put all the time consistently the same stop loss level. Sometimes I may change it, but on average I have 26 pip or 30 pip, okay, for my trade. But you can go even sometimes to 38 pip, okay, especially the euro. 30 pip sometimes it may take you out quickly, okay, or other volatile currency. 30 is not true for every tradable. Okay, if you're using a 26 pip for Apple, you may be taken out in a second, or for Google, you may be taken out very fast. Okay, so you have to understand the personality of the stock or the currency that you are taking in order to decide which risk you want to take. Okay, so the trick is to have the same stop loss level for the same time frame. Okay, so you are willing to risk this limited amount of time for high probability trade, for trade that are offering a high reward for very small a loss. Okay, so you have to check first the reward risk ratio. Okay, and you also decide how much you are willing to put online, okay, within that trade, using patterns that are valid, okay, in order to maximize your reward. Okay, but like I say in my previous video, the TSTW24 is designed to control your trade and to give you the ability to trade like professional traders. Because if you do not have the mindset or the ability to trade like professional traders, you are going round, round, round. Believe me, you will win today, win tomorrow, win the day after tomorrow, and then you give everything back. With the TSTW24 trading system, you have a tool that is putting you in the frame of the professional traders. You cannot fail if you follow the rules. Okay, so you start having consistent winning trade, not consistent losing trade. It's not okay to lose money consistently. Okay, if you want a copy of the TSTW24, you need to go to the www.stochasticmarket.com. Okay, till next time, enjoy yourself and be very happy. Thank you.